Hello, how's everyone doing? That was a tough act to follow, HMC. My name is Richard, and today I'd like to talk to you about market making, which is why we're all here. Before we get started, I'm the co-founder of RPS AI. We're a liquidity engine on Solana. We're backed by these wonderful investors and built on top of these platforms. Let's start with a question. What if market makers disappeared? Not slow down, not widen the spread, but vanish for 30 minutes. Because that's exactly what happened on October 10th, which is one of the biggest drawdowns in crypto ever. Trump announces tariffs in China, Bitcoin drops 12%, Solana by 40%. 19 billion in liquidations followed. On centralized exchanges, market makers turned off. There was no liquidity to support the sell-side orders. Some alts dropped by 99% within minutes. You know this story. It was on the timeline. On DEXs, something else happened that fewer people talk about. During the most critical 30 minutes of liquidations, prop AMMs, the on-chain version of centralized market makers, also shut off. Their tightly quoted liquidity that's responsible for 50% of our volume vanished. And this is by design. We're not blaming them. Binance was no longer a place to hedge their risk, so during the blackout, all of the volume went back to AMMs, like Meteora, Orca, and Radium. Why is this important? Well, during the prop AMM era of Solana DeFi, I want to talk about the importance of AMMs and how they contribute to the stability of our Solana DeFi ecosystem. These decentralized market makers and you all held the line on a very bad day. So what does Solana's market-making ecosystem look like today? We have DEX aggregators like Jupiter that help traders find the best price. And in order to do that, they route through AMMs, RFQ, and prop AMMs. Meteora is an AMM. RFQ, it stands for Request for Quote, which means they're bringing quotes over from centralized exchanges. And you have prop AMMs, which are high-frequency liquidity providers. We also have order books, but they're a bit expensive to run. Since June, prop AMMs now make up for half of Solana's volume. How are they able to command so much volume? Well, Jupiter is supposed to aggregate to the best price. And these guys only charge 0.5 bips. That's 0.00005 points on top of the price. They're only able to charge such little fees because they change their quotes so fast that they're confident the price they give you is not one that they're going to lose money on. But during 10:10, they turned off for half an hour. And a single Sol USDC AMM pool processed $1 billion, helping 1,014 traders deleverage. This was a luxury that was not available to some centralized exchange users, but it was available on DEX. Why is it important that our Solana DeFi ecosystem doesn't rest solely on these very efficient prop AMMs? Well, if another liquidity crisis comes, these permission entities can turn off at any time. If you traded meme stocks in 2021, Robinhood halted trading to protect certain centralized entities. The way that we're moving towards prop AMMs is a similar road. While AMMs, due to their slowness, was able to absorb the impact and let the market recover, leading to a nicer trading environment for everyone on Solana. And as you can see, as the market recovered, these LPs' losses were impermanent. However, they are facing an existential crisis. With memes now only accounting for 4% of total Solana volume, AMM LPs are earning a bit less. In 2024, they earned 8 cents on the dollar. Today, they earn 1 cent. Their capital is slowly fleeing Solana, the capital that's the foundation of our ecosystem. And this is during a time when DEXs are becoming a serious contender for price discovery. 1 in 5 trades happen on a DEX, while a few years ago, it was 1 in 50. Of the last 50 projects that launched over 100 million FDV, launched DEX first. And unfortunately, centralized market makers specialized in order books don't LP on Meteora. So on one hand, you have prop AMMs, hyper-efficient, thin institutional liquidity. AMMs, which is thick, slow, inefficient retail liquidity. There must be something that can fill the gap without sacrificing decentralization. We at RPS believe that this gap was caused by a lack of liquidity highways that connect DeFi protocols, along with real-time data to create active managed strategies. Today, active managed strategies are like if out of range rebalance, or looping, or LSTs. Not the same type of strategies that prop AMMs do. DeFi has also gotten more complicated, so reading the data is harder. These issues make building a product to do active managed liquidity really hard. And because there are no products to provide active liquidity management, everything from market making to asset management is delegated to third parties. For example, a month ago, Nil Foundation's market maker tanked the price by 50% without telling anyone. A major curator took treasury funds from one protocol to incentivize a competitor's protocol. And of course, the Stream Finance stablecoin DPEG caused by an external manager. And just when institutions are getting more serious about investing into DeFi, there's no clear way to understand risk. So it seems like we're at this crossroad again, sacrificing decentralization in the name of performance. 3 prop AMMs run 50% of volume. 3 curators manage all the TVL. Is this still DeFi that we're building? What if there were tools that can help bridge the gap of AMM liquidity or liquidity efficiency in general without sacrificing decentralization? Today, we're introducing UltraLiquid. It is a customizable DeFi strategy platform built on our liquidity engine. And it combines battle-tested, familiar protocols to help token managers manage liquidity themselves, to increase on-chain liquidity depth without market makers, as an example, harvest stable return on treasury assets without curators, and design and monitor custom strategies. It consists of a strategy platform, in-house built algorithms by our team, and hedge fund-grade Solana data infrastructure. It needs to achieve 3 priorities: self-serve, transparent, and customizable. And our debut algorithm is a delta-hedged LP strategy that increases liquidity depth while minimizing impermanent loss using Meteora and Drift and our liquidity engine. It essentially combines the benefits of prop AMMs with AMMs using quantitative models. It's 2 modes, market making and treasury management. Market making helps enter the price along the active liquidity around this price while minimizing for impermanent loss. Treasury management is about yield. It helps generate returns that are uncorrelated with long-short arbitrage or basis. Despite Solana prices falling for the last few weeks, I'm happy to report that we are profitable, and we're considering opening allocations early next year. What I'm most excited about is not just the yield or the market making, but what this unlocks, combining DeFi protocols together to create new on-chain primitives. LPing has an impermanent loss problem. We all know this. Let's use Drift to hedge it. Now we have a data problem. Let's bring Titan and Jupiter over to check Oracle prices. Now we have an execution problem. Let's bring temporal into the mix and optimize the entire thing using machine learning. Individually, these are segregated primitives, but together, it's a powerful platform. And this is just one of many strategies that you can design. Aside from running strategies, the platform should help you manage your risk. You should not have to learn about your exposure from scrolling Twitter. And this is all built on top of our hedge fund-grade infrastructure. We're the developers behind UltraLP. About 1/3 of Meteora's power users use our platform to track their P&L and manage risk. They find our data to be the most accurate and reliable. People that were with us during the Trump launch are still logging in today. And as of today, we have over $1 million in AUM from the top token foundations, with more in the pipeline. And so we're launching UltraLiquid Beta. If you're a fund, a DAO, a DAT, or a project, we'd love to talk to you to see how our algorithms can help. Thank you for listening. My Telegram and Twitter is RichardKingXYZ, and have a great Breakpoint.